Good morning and welcome to a Friday morning end of the week podcast from Hendy Consulting, the specialist management consulting firm for the display industry. And so today I want to reiterate a point I've made over the last couple of weeks, which is for people to fundamentally understand the change in the structure of demand in China for displays over the last few years. And I think everybody should bear that in mind as they think about the current market situation which we're currently in, which is the bottom of the cycle. So this is informed by two talks given at EDC in Nuremberg, one by Paul Gray of Omdia and another one from Jan Loorbach of GfK. And they both came up with the same conclusion, and I thought it was an important one to share. So thanks to those two gentlemen for the insights, and then I think it's worth reinforcing. So the issue here really is the Chinese Gen 10s began to be planned in the 17, 18, 19 period, and some of them were built then. And consumer confidence was very high, but that began the beginning of Chinese consumers switching their purchasing behavior to other things. And Paul in particular talks about housing as being important. And what they actually have done is taken fully 1/3 of the marketplace out in terms of televisions down and smartphones down. So if you know that the China market is basically 1/3 of total displays, then you're taking 1/3 each out of that marketplace in both of those. And that clearly makes a very big difference at the time people were building factories assuming that these hadn't changed. And if you go to Jan Loorbach's presentation, he's making exactly the same point. And it was really good to hear two different market analysts saying the same thing. But he's basically saying that Chinese consumers are actually spending less on television now than they were. And so that you actually can see the amount of value being spent reducing over time, and also the Chinese are the most price sensitive overall in terms of their spending on television. So this is a fundamental change in the marketplace, and it's something that we should bear in mind when wondering why we are in a sort of systemic oversupply at the moment. And so for now, I think these points of view support Paul Gray's more bearish outlook on the medium-term future of the display industry. And I do note that JOLED filed for bankruptcy in a Tokyo court this week. That's particularly unusual for the display industry. There are not very many exits of the display industry, and I think the last one we can think about is CPT. Typically assets get sold to China or something else happens in terms of a sale with another company, and I do wonder how this will impact the printed OLED collaboration with ChinaStar. And moreover, we see LGD borrowing money from its parent company, which is again another sign of the difficulties that all firms are under in these weak market conditions. Anyway, have a good weekend.